And my joke is this. My joke is that if you spend most of your money buying insurance, the only way for you to meet your financial goal or to achieve your financial goal is to die. Because then you claim,
Yeah.
right?
Yeah.
But that's so wrong.
Yeah.
So we believe that, and I personally believe that the mass market needs a lot more better advice. And the biggest problem to me in the mass market is that they buy a lot of wrong insurance. And so that's why we launched Haven. But if Haven, for whatever reason, this fifth time we fail, we still fail.
You give up.
I don't know whether I'll give up. But what I wanted to say was that as a client, you are not you are not affected. You have bought your insurance and you have bought all the correct insurance, right? If Haven one day fails, you still have your insurance. Your insurance is not with Haven. Your insurance with the insurance company that provides you with the insurance, right?
Okay.
So you are not affected at all. But please pray very hard that this fifth attempt won't fail. That we will be successful in creating. I just came back from the States. In fact, last week, I just came back from China, so I'm better than you. Thank you for doing this because I know you just came back from Europe yesterday and you're very tired, jet lag and all that. But in the two countries that I've gone to, US and China, I got a chance to share a little bit about Haven. And the people there were like, wow, we've never heard of people do insurance like that. So I really hope that we will succeed, that Haven will be a success story to show that in the industry, it is possible to give good insurance advice whilst mitigating the conflict of interest.
Very good. Yeah.
It doesn't mean that selling just term plan is not profitable, because when you look into the protection needs of an individual, it's not just about death or critical illness. Insurance protection actually involves other areas. Like for those who are working, disability income is very important because if a person loses the ability to work, okay, and this disability income insurance will pay an income replacement. And there are also other areas like hospitalization plans. Another area is the long-term care. Okay, when a person is 30 years old and above, you need to provide a long-term care. What we are doing is that we are look at your protection in a holistic manner, and then you cover those important areas. Okay, when we do that, actually there's sufficient revenue for us to be good.
Very good. And now is probably a nice segue to talk about the most troubling problem of the insurance industry. And I think a lot of Singaporeans and even probably Malaysians, are falling into. I use falling prey is the wrong word, maybe, but I cannot think of another word. Falling prey into insurance company, whole life insurance and investment linked policies, commonly known as WLP, whole life insurance, and ILP. And this one, I think I would say that, I don't have a number, my gut feel 80-90% of Singaporeans have this problem. They bought themselves into whole life insurance and investment linked policies, and generally it's because someone they know sold them this, and that person is a trusted person, so-called trusted, and eventually they bought it, and then they realized that this thing is very expensive, doesn't cover enough, and they can't get out of it. So maybe, can you first tell everybody the difference between whole life insurance and investment linked policies, and what's the problem with it? Okay, and later then we'll segue into what do we do? I cannot start on them.
Okay, so there are three broad categories for protection. So there's term plans, whole life, and ILPs. Okay, so the reason why Haven and Provident advocates term plans is because I think we all know is that most of the greatest protection needs is actually your income replacement. That means basically covering the period of time whereby we are working. Because when we are working, we are actually exchanging our time to build our resources, okay, our nest egg, our retirement assets. So protecting this period of time from now until age 65 is actually very critical. And the best way to cover is using a term plan. Okay,
so term plan, just to be specific, is those that you pay, I don't know, $10, $15, $20, and you cover 8,000, 9,000, that big number, right? Yes. But the problem with that, the one is you pay already, everything get burned up. Okay.
Yeah, and it covers only a period of time that you want it to cover, maybe
Correct.
20 years, 25 years.
Sure. Yeah. Okay.
And it's very affordable. It depends on how you
what's the cheapest in the market now? Ballpark.
MINDEF, SAF, group term life.
How much is it now?
So for MINDEF, if you buy 1 million death cover,
Yeah.
okay, the MINDEF is the cheapest. I think it's about $350 a year. I think they're about
Cheap, right?
300 plus.
So it's about $30 a month.
$25
$25 a month.
They're about, yeah.
$25 a month for 1 million.
1 million death cover. Death and total TPD, total permanent
Oh, it's very
disability.
cheap,
It's very cheap.
Last time my ballpark was 100,000 for 10.
Yeah, yes, the price has come down.
Really?
Yeah, come down a lot.
In the past, do you remember when we had the group term life?
Yeah.
Every year, at the end of the year, the insurance company will tell you that they have very good claim experience.
Yeah.
And then they give you back some money.
Yeah.
So if you sort of like minus off that amount that you get back,
Yeah.
actually it's very cheap. But like what Eddy says, has now become even cheaper. Because
Really?
the price has fallen
I
down.
thought everything gone up.
Yeah.
My car has gone up, my chicken rice has gone up, my
Apparently, term plan has no
my
inflation.
Gucci bag has gone up.
But isn't that amazing?
Yeah.
For $1 million cover,
Do you all sell?
we don't sell, but we tell you that is the cheapest.
Is it?
Yeah. Anyway, the one has to buy directly
To SAF.
Yeah, just Google MINDEF MHA Group Term Life. You will find it. I mean, if you ask us independently what we think would be the most value for money term life to buy, without doubt, MHA MINDEF is the most value for money.
But what age group we're talking about? Because my age won't be so cheap, right?
For MINDEF term, the premiums from
Roughly?
up to 65 is the same price.
You kidding?
Yes.
Okay, let's stop now. I'm going to buy now.
In the past, Eddy, you need to still have NS liability. Do they?
I think 50 years and below.
So, but I not NS more anymore.
I think you may not be eligible.
You mean you didn't buy? All these years you didn't buy? I didn't. All these years you hear me telling you didn't
I
buy.
got zero. And okay, wait. Up to a certain age, I self-insure anymore. So I.
Oh yeah, I forgot. The last interview we did, remember I
Your
said that
dad-
you have a few $1 million.
Yeah, you go and tell everybody I got $100 million. Now everybody actually believe I got $1 million.
I'm so sorry. I'm
Yeah.
so sorry. Lou doesn't have $100 million. He has got more. So
He's sabo. As a result, people think I got $100 million. If I get kidnapped, it's your fault.
I'm very sorry. I'm very sorry I belittled you.
He's gonna get me in trouble.
Yeah. So,
Okay,
so you self-insure is correct.
Okay. No. Okay. Wait, let's don't get distracted by me. So MINDEF MHA one.
So
very affordable.
But the MINDEF one, just note it's a group plan.
Okay.
Group plan basically means that you are not the ultimate
Owner.
Okay, the group is the owner. You are just a member of the group.
But people don't care.
So meaning that there will be
There's some risk.
There's some risk whereby the plan may no longer be there. Of course, it's unthinkable.
Chances are low.
SAF and MHA will be around for quite some time.
Yeah.
They'll be around, but then okay. I mean, if you ask us for independent opinion, right? We have to give you all the risks, right?
Sure.
Yeah. So the chances are low, right?
But not no.
But there is always that possibility that an insurance company may not want this book of business, lah.
Okay.
So if they don't want this book of business, then you lose it.
Okay.
And then if you want to buy it, then your health situation may not allow you to buy.
Okay.
Right. So I mean, even in investment, we always say diversify. So you don't just bang everything on one.
Fair.
One term
Good
life.
point. Okay, let's go back to the evil of whole life and ILP.
But maybe I just add one more point to the group. That plan is that the premiums is not guaranteed. That means it can come down and go up. And
means how much fees I pay.
I mean the premiums can go up because all this group plan is on a bidding.
Basis,
different insurance company will bid for this market for this piece of group plan. Because of competition, the price come down. That's the reason. But if let's say one day you found that the risk pooling is actually quite bad. Okay. Insurance company will increase the premiums. Okay. So that's the thing about group plan. The premiums are not guaranteed.
But this problem happened to all insurance plans.
No, if you buy a personal plan, I mean the next best plan, if you buy a 1 million death cover outside non-group individual plan.
Term or non-term?
Term.
Okay.
It probably set you back about $500 a year.
Instead of 3.
Instead of 300 plus.
$200 smaller.
Not that big a
so
difference.
Not that big difference. So but that gives you the guarantee that premiums are fixed.
Okay.
So
and you own the policy, lah.
Yeah, you own the policy.
Oh, I see. Okay.
So
there's this benefit there.
Yeah, so diversify, lah. I mean, still buy, right? I mean, if
some here, some there.
Yeah, I have that plan. The MINDEF MHA. I think Eddy, you have that. You have that plan.
Army Eddy.
Yeah, no. Once you have it, you have it. It doesn't matter whether you retire.
I didn't get it.
But before you already.
I go back army now. Okay.
Give me your IC. Later on, I'll ask my friend to put it back.
I go back army, volunteer for 1 year.
Yeah. Okay. I'll ask for you.
Yes. Okay.
Okay. So there's term plans.
Sure.
Whole life plans. The thing about whole life plan is that people buy the whole life plan with the benefits that there's cash value.
Wait, explain what's whole life plan first.
So,
because different people have different understanding what whole life plan is.
So whole life plan basically is we call this the permanent insurance plan. Basically means that when you buy this plan, there is no end date. The end date is death lah.
Okay.
So it covers for life.
Sure.
And because it covers for life, there's also an element of cash value.
Sure.
And because of this long coverage and cash value, the premium is very expensive. Sometimes can be 10 times more expensive than a typical term plan to cover term plan.
Why is that so? That's why I cannot understand. Why is term so cheap and whole life so expensive?
Because for a term plan, you are just paying for protection.
Yeah.
For a whole life plan, you are paying protection plus savings. So you are giving the insurance company additional money for them to save and invest for you. That's why it is more expensive than term. Yeah.
So it's expensive for two
reasons.
Two reasons. Number one is it covers the whole life.
That's right.
So as you grow older, beyond 65 years old, your medical needs and your chances of getting death and disability goes up. So you need to cover for that. And second, more importantly, is that because you want money back, you touch money back, right? So that money has to come from somewhere. Actually, come from yourself,
Because you're insuring yourself for 100 or 100 over years instead of term only 20 years, right?
Yeah.
So you want to cover yourself longer, then you pay more, right? Secondly, like I said, term is protection. Whole life is protection plus savings. So you're giving them extra money for the savings. So it's more expensive.
Actually, you could save yourself.
Yeah, you could save yourself, but okay, I'll come back. I don't want to confuse matter because there is another big debate out there about buy term, invest the rest. And then 20 years ago, people, they will tell me that, Chris, but not everybody know how to invest on their own, therefore, okay, we'll talk about that later because I don't want to digress. So we talk about term, we talk about whole life.
Right. So the thing about whole life is that it covers longevity risk. Okay, there's a cash value. And the cash value, there is a guarantee and non-guarantee. So when you buy a whole life plan, the insurance company take the risk. That means the insurance company will take the risk of investing for you. All right, and then they'll give you a guarantee amount of cash value. If you surrender at certain age, you get a guarantee plus a non-guarantee. Non-guarantee basically means that if they say the company doesn't do well, they don't have to pay you the non-guarantee portion. Okay, so that typically whole life has this element. Okay, the savings element is borne by the insurance company. Then that comes the ILP.
Wait, before that. So the guarantee part, I assume, is things that they didn't invest. These are mainly it's your savings they put into fixed D or bonds or things like that, and they return back to you after some while. That's why they can put guarantee to it, right?
Yeah, you lock into bonds.
And the non-guarantee part is they probably put into equities and higher risk.
Fair to say that.
It's as simple as that, right?
Yes, fair to say that.
Okay. Okay.
So
today I can set up an insurance company already, man. I also know how to do it. I mean, as in for myself.
Insurer.
Yeah, I in fact most people do that, right? For yourself. You put money into maybe a term insurance, and you put some money into CPF, SA, or fixed D or whatever, and you put some into equities. So in that sense, it's just that when you do it yourself, you don't package it into one product for yourself. Yeah. But everybody does that, right?
Yeah, it's just that, well, like I said, people watching this may say, but Lou, that's you. Okay, you know how to set up, you know how to invest, right? But I don't know, right? So, I just buy a whole life law. Then at least the insurance company will do it for me, right? So that's also what some advisors will argue and says, no, it's not that I don't believe in term. It's just that my client doesn't know how to invest on their own, and therefore I sell them a whole life.
Then you sponsor the Mercedes and the landed house that all the insurance agent and insurance bosses.
Okay, that's sensitive. I don't want to go there. But since we keep talking about this, I might as well say it once and for all. Eddie, before you come in and finish up with the ILP, right? So I started writing about term plans since 2003, 2004.
It's much earlier. Okay.
And when we first did that, of course, we got whack left, right, center.
Yeah, right? I also kena. Can you imagine those days you kena how jalan?
Got death threats.
Death threats even?
Yeah, death threats.
Wow.
I mean, one of the many objections I get is this, right? Is they said that, not everybody know how to invest, Right?
That is not entirely untrue.
Yeah, that's not untrue. It's true.
Untrue. There are a lot of people who do not invest.
That's right. Yeah. So my counter to that is you are the advisor. When you are selling investments to your client, you tell your clients and you teach your clients how to invest.
Yep.
Now when you are selling insurance to your client, you suddenly stop teaching your client how to invest and you just sell them a whole life because the reason is your client doesn't know how to invest. Aren't you supposed to be the advisor that will teach the client how to invest? So that reason or the excuse of not everyone know how to invest is a lousy excuse. Because you are the advisor. You are supposed to be able to teach your client how to do it or help your client invest it.
Sure.
Right? So that's one. But I think a more important reason is at Provident, right? And similarly at Haven, right? we are not advocating buy term, invest the rest.
Oh,
That's
is it?
not what we are advocating.
You're not?
We are not. We are not advocating buy term, invest the rest. Now, we're not saying buy term, invest the rest is wrong.
Yeah.
Right?
Yep.
And you are perfectly right just now to say that you can do that on your own.
Yeah.
And you probably do better. And when you separate investment and insurance, you have so much flexibility.
Correct.
Right? You don't like that insurance, you can kill it and you buy another one. As long as you're healthy, you can buy another one, right?
Sure.
Because your investment is not tied to that plan. Right? So there are a lot of advantages to buying term, invest the rest. But this is not why we are saying buy term.
Okay.
You don't buy term to invest the rest.
Okay.
You buy term for a very simple reason.
It's cheaper.
You buy term because it is the most affordable way to be fully covered, full stop.
Yeah.
That's all.
Oh.
Right? Don't mix your investment together.
Okay.
In fact, if you are not properly insured, you shouldn't be even investing because your ability to take risks is actually very low, right? So you buy term not because I'm asking you to invest the rest. You buy term because it is the most affordable way to cover yourself fully. That's all. So that's what we are advocating. Whether is it Provident or whether is it Haven, anyway, it comes from the same parent. We advocate the same thing.
I see.
Right. So Eddie, sorry, I interrupted. Please carry on with the ILP.
So last comment is, from my experience, I could be wrong, whole life insurance is so expensive that most of the time you cover yourself inadequately.
No way you can cover yourself fully.
Yeah, you can't, right? It just can't be done.
Yeah.
Because I don't know, I like cover myself 20, 30,000 or 50,000. The cost is already some very, very big number already, the premiums.
Yeah.
Right? So how I afford to cover myself? You know, today I die, I imagine that, let's say, okay, don't say today, let's say when I was in my 30s, I've got 3 children, right? And my income is still, my savings is still low. If I die, I will need at least $1 million cover or something like that, so that they can at least reach 21 years old, something like that, right?
Yeah.
But 21 years old, if I buy whole life insurance, what's the premium like, roughly?
Whole life insurance, some years back I did a calculation. Pure whole life insurance.
Yeah.
Not multiplier. Pure whole life insurance for someone 45 years old, male non-smoker, covering 1 million. It costs about 30 over 1,000 a year.
30 over 1,000?
30 over 1,000 a year.
Wow, starting a month.
Pure whole life.
Yeah.
Right? Of course, now today there are things such as a multiplier.
Okay.
I think a lot of the products today are multiplier products. Right? Multiplier is actually a small whole life packaged with a term.
Oh.
Yeah, so it looks cheaper, but it's not really a whole life.
I see.
I'll give you an example. Okay, so let's say you buy 100,000 sum assured 5 times multiplier.
Okay.
What that means is that if you die before 70, you will be paid, your family will be paid 500,000.
Okay.
5 times multiplier.
Sure.
If you die after 70, the 5 times multiplier disappear, your family will be paid 100,000.
So it's just packaging?
So it's actually
term
a whole
insurance
life 100,000
plus
400,000
of term insurance.
Up to 70. Yeah, but it's called a multiplier.
And is it more expensive to buy term this way?
It is. I mean, it's not even whether a question of whether it is more expensive. Sure. It just goes to show that
they believe
you need term.
You need term,
because
right?
if you just have a whole life 100,000, it's insufficient. So I package a term, but after I package a term in, ultimately there is still a whole life. Now, less people mistaken us. We are not saying whole life is useless. We are not saying whole life is unnecessary. We are not saying whole life is toxic and evil and bad. No, it's just that in most situations you don't need it. There are.
Isn't that as good as saying?
No. Okay. For example, if you want to buy an insurance, to pay for alternative medicine treatment, for example, you will need coverage forever. Right? Because many Chinese medicine treatment will not be covered by your shield plan, right? And you may, don't say you, I may get cancer at 70 years old, right? Right? So I may get cancer at 80, I may get cancer at 95. So if I want that option to have money to pay for Chinese medicine, then I need a plan that covers permanently. That plan is a whole life plan because no other plan can cover permanently, right? And I will buy a critical illness plan, that covers me permanently.
I see.
Attached to a whole life that covers permanently.
I see.
So there is a use for whole life. Not that there is no use case at all for whole life. It is just that, like what Eddie has mentioned, in most situations, when you are buying to replace your income loss due to death, disability, or a medical condition, you don't need to cover permanently. You only need to cover your income producing years because you are buying insurance to replace your income loss. So you should only cover your income producing years, and that's a term plan.
That's fantastic education, right, ladies and gentlemen. It's something that that I think everybody who is now contemplating whole life, kena start with whole life, you better know what has just happened. If you didn't catch that, please go and rewatch that part. Okay, it's very first time ever, well explained, by experts. Okay.
And good news is that nowadays, after 20 years, I see more and more people knowing this. Your entire 1M65 chat room, I think you have very educated followers who they are actually educating everyone. I see them talking about it in 1M65 Telegram chat all the time. Anybody brings out a whole life, you gonna send down already. People are educated, but it's not their whole life is wrong. I just want to say.
Yeah. So just to back up, there are three situations where we think there's a good reason to buy whole life.
Okay.
So first reason is what Chris mentioned.
You need cover beyond 65.
Is to supplement your integrated shield plan.
Okay.
Because your integration plan cannot pay for your Chinese SIM.
Okay.
Right. So you need some extra money. You want to buy ginseng or buy
Sure.
some I don't know 补药 if someone get cancer, right? So you need a supplement. So
Okay.
And another reason is because of the cancer drug.
Okay.
Because nowadays, because of
That's a
the
good point.
IP plan, right? Integration plans, there's a restriction on the cancer treatment. Since 2022, there's some restriction. That means you can't claim as charged already. Okay. So this small critical illness plan actually can help to cover the gaps in your IP plans. So that's number one. Number two, number two justification for whole life is basically for people who have legacy needs. Okay, these are not for men on the street. These are more for the affluent. Okay, because men on the street is concerned about income protection, right? Because their wealth is dependent on their ability to earn income.
Sure.
But for people who are affluent, who are high net worth, they have more than enough already.
Yeah.
They don't need income already. They have a lot of assets, and their objective is to give away their assets to their next generation using insurance. And
I thought that's more relevant in US where there's estate duties.
Singapore also can. Yes, estate duties because US, for example, the tax rate is about 40%.
Correct. Yeah.
Okay, so you need to buy a whole life to cover this inheritance tax,
Sure.
estate duties. Okay,
Sure.
but in Singapore, for those who are high net worth, they want to give away a huge sum to their dependents, to their next generation.
they may think it's a cheaper way to give lah.
Yeah.
Because if you accumulated, remember you got 200 million, right?
Oh, 200 million.
Yeah.
People now think it's 200 million.
So you got 200 million.
Okay.
So today,
When we say 2 billion, okay, never mind. Okay. Okay, now
I
200 million, 200 million,
I'll
200
just
million.
share a fraction.
Okay.
So you got 200 million, right? Instead of leaving, say for example, you want to give away 100 million to your 3 children.
Sure.
Then you got only 100 million to spend.
Sure.
Right?
Only, yes.
Yeah. So a better way might be instead of giving away 100 million to your 3 children, you take a fraction of the 100 million, go and buy an insurance policy that will give them 100 million when you die, and then you can spend more money today. Does it make sense to you?
It makes sense, but the insurance company is not stupid, right?
Not stupid too, because
is there such a good plan that can do that?
no,
Yes,
insurance plan generally is like that.
Okay.
You are paying a small premium
Sure.
for a higher sum assured,
Sure.
right? So instead of giving away 100 million,
Yeah.
you take tens of millions, okay, to go and buy an insurance plan that will pay 100 million sum assured,
Sure.
lah,
Okay.
right? Then you can spend more.
But this is not for mass market.
Yeah, it's for men.
It's
like,
really
more
for the
It's for the
affluent.
really, really atas, right?
yes.
Yeah, but Eddie is just sharing the 3 areas whereby
Okay.
you
So
can use a whole life.
to support the IP plans,
Sure.
legacy planning.
Sure.
And third is basically for children. Because for when for children, one of the good insurance that you can buy for them is critical illness for them. Because critical illness is not easy to buy when the person is
Sick.
unhealthy, right? Pre-existing condition and
Yeah,
stuff.
yeah,
You
yeah.
can't buy. Okay, so having a CI plan for the children is actually a good head start for them. Lock in insurability and it's not expensive.
See.
Yeah.
Okay, very good. So this is now a nice segue into ILP. Okay, like
So ILP, I know Chris is a very expert in ILP, but let me.
I'm not expert. I'm hated for saying what I have said.